Some interesting trades have taken place over the last couple of weeks. Let's dissect them through the magnifying glass and see what they were made of. As there have been quite a few swing trades lately, I decided to make a follow-up to clear the pipes. Many of these trades were recommendations by Framgångsjakten, whom I have chosen to piggyback on when it comes to certain stocks, as he's admirably well tuned into the fundamentals and technicals of certain sectors. Sharing trade prospects and ideas with one another is quite a common conduct amongst professional traders. In this sense, we present fairly readily chewed cases to one another, the golden nuggets, rather than having to scout through hundreds and hundreds of charts on our own every single day and thus risking to miss out on good stuff. Also common is to discuss and compare charts to see what we might have missed out on ourselves. Call it independent teamwork if you want, but it is a great way to continue improving and to get to know great people. And for any Swedish followers out there who haven't checked out his channel already, I strongly recommend you to do so. I'll put a link in the description below. For in the last month alone, he has sniffed out one parabolic run after the other. The stocks we'll discuss today are the following ones, and as always, but mainly because I'm a pedantic grammar Nazi, we'll go through them in alphabetical order.
Es bleiben im Raum Keitel, Jode, Krebs und Butter.
Das war ein Befehl! Der Angriff Steiners war ein Befehl!
Fifth Planet Games, OMXS30, Ovzon, Rolling Optics, Starvault and Seinsec. But before we get started, do note that nothing in this episode is financial advice. Do your own research prior to any investments. You alone are responsible for your own trades, just as I am responsible for mine. This is one of Framgångsjakten's positions that I chose to piggyback on. Normally I wouldn't touch a stock like this with a 5-foot stick, as stocks that have taken a 99.5% beating in 5 years are as good for your financial health as smoking heroin is to your body and your mind. But without going too much into detail on this one, it did make a 1600% recovery since the March bottom and at heavy trading volumes. The price is now consolidating in what currently seems to be a huge bull flag, but which of course could easily turn into something else, such as a cup and handle. If things pan out positively and we get an outbreak to the north from whatever ultimate formation that is formed, the technical target for a bull flag would be somewhere around 460. And if we were to get a cup and handle, the technical target would be at the horizontal resistance at around 570. Do note that I say if here. There are just too many ifs, which makes me take a conservative line in this whole prospect. And of course, any such targets, which would be equivalent to price increases of 170 and 235% respectively, are unlikely to be reached in a straight-out fashion without some bumpy consolidations and doubts along the way. Yet the stock sure has upside potentials that appeal to me. I also like how the RSI on both the weekly and daily have strongly recovered within their respective bullish red RSI channels. Having said that, and given the risks still involved, I have only invested 4% of my portfolio value into the company. In fact, they can even go bankrupt without it affecting my account too much. For this reason, I have not set any fixed stop loss, but will rather adhere to the somewhat abstract approach of sticking with it unless the technicals turn consistently sour. Even a halving of my entire position would amount to no more than a 2% net loss. Result: the trade is still in action, nothing is sold. This one is the most important one, as a well-needed correction could very well bring all the other swing positions down with it. This also has to do with the fact that many small and mid-cap stocks have gone up a bit too much and a bit too fast lately. I took a short at 1759.70 at a 9.5 leverage. My line of reasoning was that we had just had a double top with strong downwards momentum, Add to the mix that I also wanted to front-run the RSI on the weekly, which closed at a clear upper bearish blue last week, and where breaking below the weekly opening price of 1755.28 would confirm the RSI as a short signal. Of course, this entire project backfired and I released my entire position prior to today's closing at 1774.80 after having added an extra 50% to my position at 1773.50. Now, the difficult thing with trading indices, especially on the lower time frames, as in the hourly and lower, is that once you take the trade, everything looks crystal clear. But once the trade begins to unfold, you realize it can literally go in any of 100 ways and you quickly find yourself out of control. Eventually, whatever clear and confident reason that caused you to enter the trade in the first place now makes you feel stupid, as another obvious route emerges, seemingly out of nowhere. One that diametrically counters your initial conclusion and suddenly points in a polar different direction. This makes you feel doubly stupid and you immediately begin to battle the old norm of never changing your preset stop losses. You tell yourself that the technical map has changed, that it now contains new information that you were not aware of upon taking the trade. Whatever you do, whether you change it or not, you will likely find yourself at the losing end of the deal. And given how the technical map unfolded, keeping this position overnight would just be too risky. When zooming out a bit, there are two things that speak in favor of further rises. First of all, when a price breaks the 786 fib, as we can see it has on the daily chart, chances are strongly in favor of a retest. Statistically, you will have a hard time finding equities that top or bottom out in the gray area between the 786 fib and its measuring origin, the all-time high of the OMXS30 in this case. The second argument is that we are well on our way to forming a cup and handle. This formation is best visible on the hourly, where a break above 1797 would confirm such formation and give us a technical target perfectly aligned at the previous all-time high. Whether we get that cup and handle or not, I'm fairly certain that we will retest the all-time high sometimes fairly soon, and will hence treat this possible correction as just that, a correction. One in which I will take profits and prepare to go long again. My OMXS30 game plan is this. If this week's candle turns red, I will take a leveraged short as the weekly RSI will give me a short signal. Although I will exit it immediately if the candle turns green again and re-enter once it turns red. For more on this, please watch the extensive RSI trilogy. In the other case, I will wait until we get a breakout from the cup and handle upon which I will take a leveraged position, but of course a long one in such case. This would also open up for a lot of stock re-entries, as such 10% index move would certainly bring the rest of the astronauts up with it, especially small and mid-cap stocks. Result, minus 6%, or a minus 0.65% return on my portfolio. I don't know Ovzon well. In fact, I barely know it at all. Most stocks have their own characteristics and tend to move and behave somewhat uniquely. This is due to several reasons that I won't get into now. Ovzon 2 certainly shows some peculiar tendencies that would be exceedingly beneficial to exploit if only I knew them well. Like my own relationship to the Starvault stock, or cats, which I can also read well. But this one leaves me somewhat in the dark. The reason why I positioned myself in it was because it was another of Framgångsjakten's suggestions that I decided to go with. I bought at 51.60 for 10% of my portfolio value, as it also looked fairly strong technically with steadily higher highs and higher lows, and as it was trading right at the Ichimoku support. Just 2 days later, it blew up in the air like an explosion. I thought it reasonable for Obsun to reach its first level of resistance at 60 to 62. The very next day, I was at an airport and didn't have my charts available as the price took off. But as I remember the resistance level, I decided to sell it off at an average of 60.45 rather than to gamble. For when things move that intensely, they tend to come back down strongly too. This time, however, it just kept on going. Nevertheless, the swing trade still generated a solid 17.5%, or a plus 1.75% return on my portfolio value in just 2 days. Now, Ovzon still looks technically strong, and this bounce was exactly what I was looking for. My only problem is that it was a bit too aggressive, and it does come with quite a big gap too, not to mention the somewhat disturbing sell-off volumes. If the price stabilizes at the horizontal support level that also coincides with the 0.5 fib and or at the top of this technically unconfirmed trading range, as it only has 2 touches on each side, I might look to enter again. As of producing this, the price has just tested the 0.5 fib and the upper level of the range. If the price manages to stay above, it can very well pave the way for a good prospect swing trade. Do note, however, that this presumes that the global indices continue to show strength too, for if they were to suddenly pull the plug, most stocks can be expected to move down fast. And as mentioned, that will especially apply to small and mid-cap stocks. Result? Plus 17.5%, or a plus 1.75% return on my portfolio. Again, another of Framgångsjakten's positions. Not gonna talk too much about this one as it's quite technically shallow. This is because it's trading in somewhat uncharted territory and with too little data to make any coherent general picture of it. And just like Fifth Planet Games, this bugger has gone from its peak at 125 and down to 1.50 for a 99.8% nosedive. Technically, it sure displays some erratic movements, and my position in this company amounts to no more than 5% of my portfolio value, similar to Fifth Planet. The only significant sign of more potential upside to come is its record levels of trading volumes, which have accompanied this 100% move over the last few weeks. If these levels partially persevere, I think it could be fuel enough for another move. And if we get a Friday close on the lower bullish red on the weekly, that on its own could be a strong indication of an upcoming move, as it has generated several much profitable signals already. Result? The trade is still in action, nothing is sold. Given my decent size in Starvault, my plan was all along to begin offloading my positions somewhere between 45 and 48 to ensure I'd get rid of it all. In the end though, I decided to release my entire position at an average of 0.405 for a few important reasons. First of all, on the day before the quarterly report, the price made a weak attempt at the previous pivot top at 0.45. It traded at this level very briefly and at weak trading volumes, upon which it was immediately rejected. It was obvious that the stock had lost much of its momentum at this level, at least for the moment being. Secondly, Starvault has a historical track record of performing poorly upon report dates. And thirdly, I was heavily invested in the company and had already made a 200% profit. It seemed like a good time to eliminate the risk and secure my position. My main confusion upon the report was that the price barely reacted to it. Nothing much happened, and Starvault just confirmed that they expect to deliver the launch at the end of this year. As of producing this episode, the price has been hovering around between 43 and 48, but at very limited trading volumes. When I look at the sell orders versus the buy orders on the market, the sell orders greatly outrank the buy orders, and each day since the report has been scanty in terms of trading volumes. All this accounts for a disinterest from the buyers, as most people who want to be on board are on board already. Hence, whether the price will temporarily peak at 45 or 50 is irrelevant. The temporary upside from here on is very limited, and sticking with a huge-sized swing trade at this point is just too risky. The last thing I want to do is not being able to get rid of my position before the price suddenly decides to turn on me. I learned my lesson when I predicted a previous local top at 28, upon which the price indeed met that target, but utterly briefly and at no trading volumes whatsoever, upon which it literally rolled over and shot down like it has done so many times before. And I did not want to risk that happening again. My Starvault swing trade still booked me a proper 200% net profit and more than doubled my total account. It is the key swing trade that brought me back somewhat on my feet again. Having said that, the Starvault stock still has more to give, and I will keep you all meticulously updated on it, as I intend to fully exploit every swing move in this company. Result: plus 200% or a plus 105% return on my portfolio. This is a fun one. I bought it for 7% of my portfolio value at 1080. The very next day it made a first move to the upside of about 10%. The following 2 days it consolidated sideways, upon which it again shot up like a dope addict. I sold off an initial 50% at 14.55 to secure profits. Also because it had already booked me a 34% profit in just 4 trading days. I then sold off another 30% at 18.26 on its way down after the price had been rejected twice at 18.84 and was sniffingly close to touching the 1.618 fib. The remaining 20% I still hold, but will release it once the stock begins to show technical weakness. It is always difficult to sell off at the right point whenever a stock goes into uncharted territory, as in new all-time highs. But experience has taught me that securing profits will never make you poor, but sticking for too long with one just might. And given how the markets in general have been rallying lately, selling off the lion's share of my position seemed like the right thing to do. Result: plus 48% or a plus 3.5% return on my portfolio. In a soon-to-come episode, we will go through prospect trades that I am looking at taking. There are quite a few interesting ones out there. The reason alone why I don't bring them up here is because each episode takes much time to produce, and if I throw too much into each episode, the technicals may change too much upon my producing. That was all for now. Thank you and goodbye.